Good evening, everybody. Just kind of a cold winter evening here in Pittsburgh. Let's see, what am I looking at? Oh, the Dow. Pull up the Dow. So we can see what's happening here on the Dow. This perceivable downtrend is now just getting broken out. Doesn't matter where you put this. So here's kind of what should be, oh, come on. Kind of a cest from a wedge type formation. You can see how they pulled it back, took it up. Pulled it back to the bottom of the wedge, took it up. Hold it back, but this time, instead of pulling it all the way back to the bottom of the wedge, they support on the 50, which means the selling pressure is starting to disappear. And without that strength in the selling, that gives us that much better probabilities they could be breaking this out to the upside. And the NASDAQ had potential sell signals right here with this two dark crows. But now they've brought it back up. So now the next part we want to watch is this little downtrend. And the S&P 500. Now, doesn't mean a whole heck of a lot right now. We'll probably see some sort of whipsaw in the markets based upon the CPI. I guess the CPI comes out at 8:30. Is that right? So we're going to know pretty early whether this is breaking out or whether they take it down hard. We're still in this sideways wedge. Not really a morning star. And now a morning star would have to close above the halfway point of this candle. So right now there's no real reversal signal unless we get more information, which would be they trade positive and then again get up above this little downtrend. Okay. So when the markets are kind of wishy-washy like this, there are strategies that still become, okay, 8:30, that's what I thought, all right. Strategies that are still very effective depending on your time frame. If you're a day trader, which we're going to be going through on Saturday, we know there's very strong setups. If we see a gap up doji above that open, we see a positive open after that, you've got a very strong probability that you're heading higher, number one, and number two, that the magnitude of that trade is probably going to be relatively strong based upon the strength of that trade. So when you get something like that, when you add up everything together, so let's say after they announce the CPI and all of a sudden the market futures go straight up, well, here's that bullish flutter kicker. This becomes a very strong potential trade setup of bullish flutter. So there's about 7 of those type of patterns that we're going to be identifying, and depending again on your time frame, if you're a day trader, it gives you a supply of day trade setups. Even if you're not even if you're a signal, if you're a swing trader, makes for a very excellent entry strategies. All right, so we've got a lot of good patterns working. As you can see, EDIO, and it did a bobble breakout, did the J-hook pattern, another bobble breakout, is pulled right back to the T-line. This one can still be bought, even though you're way up here in the overbought area, because you can see the type of patterns that are being created in a bullish uptrend. And these are the type, again, you want to get stuck in. You can see where the bobble breakout occurred. You just stay long as it stays above the T-line. IoT, bobble breakout. Just stay long until you see a sell signal. So a reason I keep pointing these out is if you've got 10 positions on, which is usually my average number, I don't want to have to sit here and analyze each one with great specificity, detail. I can say, well, this one's still above the T-line, coming out of a fry pan bottom. That's about the length of time that I need to analyze that chart to move on to the. Now, we recommended ROIV. Oh, hell's bells. Doesn't come up over here. That one's doing a bullish signal again today. Friday did a bullish left-right combo right on the 50. Today it opened lower and came right back up doing another bullish engulfing signal. I don't know why some come up over here, some don't. And so there's the continuation of this one. Notice where the J-hook plus occurred, right here. Now, not only was that a J-hook plus that told us the 50-day moving average was going to act as support, look what else we can kind of look at and say, well, there's a new dynamic in this chart. Kind of right up through that level, telling us they aren't resisting anymore at this downtrending resistance level. J-hook pattern breakout, J-hook plus pattern breakout, this gives you a high probability trade setup. All right, get rid of that. Okay. So we saw a very strong breakout. There's your fry pan bottom. There's your kicker signal. Even though it backed off today, it's not unusual after a big price move. Still would be a buyer of this one, especially if it came up through today's open. I would tell you this signal and pattern are still working. A J-hook plus is nothing more than a J-hook, but at a level that everybody else can see. SMCI. See where the J-hook occurred? Right on the 50. You took the 50 out of here, you had a J-hook pattern. But it was even more evident because it was doing it right at a major moving average. Net. Look where this J-hook pattern started. Basically came right down, practically touched the 200, did a bullish engulfing, started back up. So not only was this a J-hook pattern, what I call a J-hook plus, because you can see where it came back, tested the support level, and headed right back up again. Domo came up, pulled right back to the 50, doing a kind of a morning star signal, closing above the T line. Positive trading would give us the prospect of a next wave, and it did it right at a level everybody else is watching. Look where the kicker type signal occurred on this one, LADR. Hit the 50, gapped up, kicker type signal, J-hook plus, because you can see exactly where the selling stopped and they started the buying. And XMTR, morning star, left-right combo, right smack dab on the 50. Where do you think the next first target is? Right back up here to the 200. So a J-hook is just that hook. Now we can see it much more clearly because we've got the T-line on our charts. So what makes this a more relevant J-hook? The fact that it came right back to the T-line and started back up. Now that's a little less, what do I want to say, convincing or compelling, because we're the only one knowing what the T-line does. It's when they come right back to a major moving average that everybody else is watching and can see see what's happening, because they're all watching the major moving averages. So this I would consider a J-hook type pattern. Now in this case it did actually support on the 34, but not very many people actually have the 34 EMA on their chart either. But what is the better of the J-hook patterns is the bobble breakout. Everybody can see that it failed right here at the 200, pulled back. Now what can we see on the pullback? We can see that the T-line was acting as a support level, telling us we have a J-hook pattern bobble breakout. The green line is a 3T line. Works relatively effectively in conjunction with the T-line. Works more effectively the further away you move from the T-line, the 3T line kicks in. And TGI, also kind of a bobble breakout setting up. Oh, I didn't even get through all our ERTX. Well. ERTX. That's not right. Is it? BKT. There we go. Now you can see what's happening here. There's your fry pan bottom. There's your doji sandwich. Got a breakout right there. Well. That's worked out nicely. There's your kind of your doji sandwich up through the resistance level. Okay, let me see what else we got here. Oh, I was anticipating these J-hooks to be setting up in the artificial intelligence stocks. That might have taken the wind out of the sails on this. I still think it probably will eventually do a J-hook wave 3. and looking for that same thing on sound, except it closed back below the T-line. So now what we have to watch for is to see if it starts curling back up. On the short side, anytime you see a big candle like that, get ready to short it. That was the killer. UPST also showed where they gapped it up. Look how far away you were from the T-line up here. Then the next day they gapped it down. Repeat this over and over. Anytime you see a gap down in the overbought area, down near the lower end of the previous day's trading, get ready to short it. That means the bears have really taken control. And Peloton, you see the doji, left-right combo. First target is to fill this gap. Then I'd figure the next target's down here. So in a market like this, you've got a constant supply of both long and short positions. Now, NVIDIA, as you can see, backed off, but where did it back off to? Basically right here to the T-line. Didn't go through it yet. Apple used the T-line as support. Amazon, you wouldn't pay attention to this one on the long side because it's still below the T-line. Again, there's that big gap down telling you there's going to be some more downside. Let's see, Netflix was the one I forgot. So here's kind of what you look at on a chart like this. Which direction is this going? Not really anywhere. So that's the nice thing about the visuals of these charts is even though there's a buy signal, bullish harami, it's not going anywhere. So this is where you can be a little bit selective and say, nah, I'm not going to trade this one right now because there's no trend to it. I want to see something more like this where he's got an actual trend. All right, so another element that we're going to be looking at, when we see something like this, let me make this bigger. You can see the fry pan bottom, and then look at the breakout right there with a best friend signal. Now, if you caught it in time, I think that's the advantage of having a chat room where everybody's kind of looking for the same type of pattern breakouts. You didn't catch it on this day. At least you knew what the effect of this signal was. There's a lot of strong bullish buying coming in, which means if it opens positive the next day, and is this kind of sucking us in or has it got more upside? Well, that's where you go to your 10-minute chart. Yeah, they're still buying, not really selling it off. They haven't really done anything major below the T-line. They're still buying. This is what kind of keeps you from taking profits too quickly or getting whipsawed in and out of a position. Whoops. Go back to the daily. That's the type of thing that tells you there's probably going to be more upside. That best friend breakout. That best friend breakout. So the reason I'm pointing this out is if we have a best friend breaking out through a resistance level, say your wave 3 is in progress. Now, not everybody's going to want to trade these. That's why having the 15, what we call the top ranked signals and patterns, it gives you the opportunity to pick out the type of trading style that you want. It could be, maybe, yeah, at this point, maybe it's too far away. At this, it wasn't. But at this point, it wasn't. So it's not that you might want to be buying it now. It's more that if you were a day trader or a swing trader, that you could have been buying this. Now you have to see what it does from here. But even as a day trader, if you were buying here and selling out up here somewhere at the end of the day, you made a good % return that day. Whoops. This is the type of thing we look for. Where are the probabilities of a big price move about to occur? Notice, we can observe right at this level was where this pattern started. If it opens positive, what's that telling us? The pattern is still working. This level is not acting as resistance. And then always that rhetorical question. You always get a big price move like this at the breakout level. Not always, but the probabilities are pretty strong. But let's say the probabilities are much stronger that you're going to get involved in a situation like this than not trading off the pattern. Okay, did I do this one? I think I did. Domo Morning Star Signal. VIST. Gapping up. Doji gap up, gap up, gap up. Remember, when they start gapping things up, especially gapping up through resistance levels, it tells you there's a lot of bullish strength. So this kind of dispels that fear factor that I know most of us had, that, boy, I don't want to be chasing this. You do if you know what type of results are coming from signals in what investor sentiment is doing at the... This one had earnings after hours, apparently, and it closed way up here. I don't know where the exact level is. I can find it. Let's see. Right now it's at 889. You can see the big reversal. So that becomes something that tells you this starts opening positive and trading positive tomorrow. You can start going after it. Because there has been a dramatic change illustrated in the chart, but there's a dramatic change of investor sentiment. Another one. Right about the breakout level of a fry pan bottom through the 50, they gap it up. That should get rid of that trading strategy to say, oh man, this looks good. I'm going to wait for it to pull back so I can get in at a better price. The non-logic of that is if they're pulling it back, there's not a lot of bullish strength there. You want to be buying this one in the strength, because that's exactly what the chart is telling you. They're coming back in with great enthusiasm. A high probability trade setup is kind of the message 45 degree as we see in SOMO. Same thing in message, a message by a 45 degree. So these are all trading strategies that have high probability results. Another trading strategy is finding the high probability trade setups. Z-Lab. Look where it closed up above the T-line today after doji off the 50, almost touched the, basically touched the 200. So what do we know to do on this one? Well, if it trades positive after a best friend signal up through the T-line, if it starts trading positive, what else is it kind of indicating? Pretty much the fact that this downtrending resistance level is not acting as a resistance level anymore. First Solar. Same scenario. Now your first target might be right here on a positive open, kind of morning star signal right off the 50. Now, what do these signals tell us at these levels? What they're telling us is what everybody else's decisions are at a support level. We just happen to be able to see visually what those decisions are. PWSC. Use the 50 as support. Doji. Look where they supported today, right smack dab off the 50 and took it higher. Kind of the same entry strategy. It basically starts trading positive coming up through this level. Tells us we're probably in a wave 3. What was the signal on First Solar? SP. What is that signal on First Solar? You wouldn't necessarily say it was a best friend signal, but it has the same ramifications. Remember, a best friend signal is when you can see a clear gap in this area. This doji, then a bullish gap up from the close of the previous day, trading positive. All right, so what is this? You could probably put it in the category of a morning star signal. You could also put it in the category of a doji bullish confirmation. It doesn't matter what you call it. I mean, it's got the ramifications of a morning star signal. It's got a doji bullish trading, closed right at the T line off the 50 in the oversold area. What's our trading strategy? If it opens positive, you can start buying it, and you know exactly where your stop is. If it came back down and closed back below the T line, you close it right back out because it told you they weren't confirming. But at this point, the probabilities tell us if they open this positive tomorrow, it's probably going to go positive. Is it because the candle after in that direction? Well, yeah, because it kind of gapped up after the doji. So there was a little gap up, and where did it do it? It did it right there on the 50. So doesn't that visually tell you that they're kind of confirming with a doji gap up, whether you want to call it a morning star signal? Now we know what everything else should be doing. If it opens positive, it's confirming. In the 5-minute, in a stock signal, same as daily, can the signal be used to make entries? If you want to, or the 10-minute. For example, I don't know, did I do this already, the hogs? I'm analyzing this chart, and I see indecision, and they start trading it positive. Do I want to go after it? Is it very strong? Well, there's what's happening, and boy, they're going up. I better start buying it, because as this is going up, what's it telling us about this candle? It's the daily candles heading higher. So if I'm trading this on a day trade basis, that's a very good entry point. And where do I sell? I sell right there. Because what was it telling me about my 10-minute chart? Look how far away we are from the T-line and the overbought area on the 10-minute chart. Where do you think the first target's going to be? Right back here. So let's take our profits right here. If I want to be a little bit more refined, start seeing some indecision up here. Now I can flip to my 5-minute chart. Ow. Oops, I've got a sell signal on the 5-minute chart. So I'm out right here. Where was that on the 10-minute chart? Well, in this case, when it started coming back down through the open up here in the overbought area, it started turning that candle red. That would have been a good time to take profits. That's the type of thing that kind of gets you out of positions right at the appropriate time and keeps you from having to sit there trying to make a decision. It gapped and closed in the halfway of the first candle too. Yeah, that was on which one? First Solar. Yeah, so gapped up, closed more than halfway up that candle, off the 50, closed right at the T-line, makes it very simple. If this opens positive tomorrow, they're probably going to be trading at positive. Williams-Sonoma. Kind of a morning star signal down here. But also, I want to illustrate, look at your bearish flutter kicker signal. Once again, look at the warning signs of when it's time to take profits. You're up in the overbought area, they gap it up. That alone starts telling you, I want to get ready to take profits. The next day they gap it down below the previous day's open. What's that telling you about the strength? So you close it out, take your profits, because they've gapped it up in the overbought area. That is your alert. Gaps. We will do a session on gaps, except there's so many, not so many, just basically 4 ramifications. We might have to do that on a Saturday morning. But notice what this gap up is telling us. We're not anywhere near the overbought area. They've gapped it up, consolidated, gap it up. They gapped it up through this level. That's got a different connotation than if the stochastics were up here like this. That would tell us that. Let's watch out for taking profits. There's the ones that you get ready for. If this started trading positive, what can we visually see as a pattern? Wave 1, wave 2, getting ready for wave 3. Okay, a few on the short side. Nothing here. You can see the little very J-hook pattern. Telling you there's still more downside. That's on KDNY and SG. Nothing here yet. Where did these things all come from? That's still got potential of heading down further. TSDM. There's another little bearish J-hook pattern. And what started, no, not that. What started this downtrend? Look at the failure at the T-line, kind of a shooting star doji gap down. That tells you wave 3 is now in progress. So these are all visual pieces of evidence created by the candlestick signals that if we know there's indecision and they're gapping it down through a support level, we know the type of pattern to be looking for. Wave 1, wave 2, wave 3. Whoa, that's not what I want. Where's our next likely target? Down here. And the shorts are still working. And notice what happened when they gapped it up. Had potential of a big breakout, but this is why you always pay attention to the signals and what type of action it's doing in a pattern setup. Doji, 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 left-right combo, close below the T-line. What it tell us about our uptrend? It's probably over. What's it telling us about our downtrend? Filling the gap or heading for the 50-day moving average? So when you have a big move to the downside and you start shorting it, now what are we starting to see down here in the oversold area? We're seeing buying, and there's a left-right combo. What's this telling us about our downtrend prospects? Telling us the probabilities are starting to go against us. It's buying down here. Let's close out the position and go find another chart that has much more downside potential. Bill. That didn't qualify for a short. Came back up. Failed. Now what do we got going on? There's your bearish J hook. It comes down through this level. What do we know about our chart pattern? Wave 1, wave 2, wave 3 breaking down. Okay. So tomorrow we've got to be watching to see what the pre-market futures are telling us about everybody's opinion or decision making based upon the CPI number. So there's already estimates out there that it's going to be somewhere between 6.3 and 6.5%. 8:30, yes. So this allows us to make a much more logical assessment of what would be happening. If all of a sudden, after the CPI, they show the pre-market futures are going to make the Dow open up 230, well, that's a pretty good indication that this level is not acting as a resistance anymore. If it's down 230, opening down here, it tells us we're in a sideways mode. Same scenario over here on the NASDAQ. But this could be coming back up, breaking this level. However, if they show the NASDAQ going to open down 70 points after the CPI, that's telling us, yep, they didn't do a reversal signal and a close above the T-line. Exactly right. Yep. But we will know that, and it doesn't really matter what the exact numbers are. Even if it's 6.5, and we see the Dow futures are going to be up 230, that means 6.5 wasn't bothering most people. Is there a pattern name for W's and M's, or do they kind of fall in the tri-pin bottom? No. There's a very specific name for W's and M's. W and M. So either on a W you have a double bottom, or on a M you have a double top. So I always like to use the example that you can tell, or you have much more clarity as far as when a reversal is occurring. I always like to give this that day right there. That was not a reversal signal. That was just an up day and a downtrend. They gapped it up. But notice what the strength of this non-signal was, not very strong. When did they start the uptrend? When they did a big bullish engulfing left-right combo close above the T-line. That was a signal. So the reason I keep pointing this out is just because you see a bullish day doesn't necessarily mean it's a reversal day. If that was, the rationale should be the Japanese race traders, after 400 years and watching probably millions and millions of charts, that if this was some sort of strong reversal signal, they would have given us a name and told us what it meant. The fact that they don't have a name for this tells us they've looked at it and said, well, that's not a reversal signal. That's the reversal signal. So anyways, right now you can see we're sideways. And a lot of people will ask, well, what happens when things swing up and down above and below the T-line? How do you trade that? Well, the answer is you don't. That's what they're telling you. It's swinging up and down above the T-line and below the T-line. There's no trend there. Oops. I meant to go through some of the crude oil. You can see the direction of crude oil right now. Pretty much sideways. Bouncing between 72 and 82. Now I kind of look at this and say, all right, over the last few weeks or over the last month, about exactly where it was a month ago. So that shouldn't be taking down inflation very much. I guess we've all done the egg study to see whether eggs are coming back down in price. So I'm mentioning that because what could be the assessment for the CPI tomorrow? Well, it might not have moved very much. Still high in eggs, all right. And gold, maybe I've gotten out too far. BCAG. Gold, as you can see, again, notice where gold reversed on your big bearish left-right combo. So gold isn't acting well. Silver, still heading in a downtrend. And let's see. The dollar looks like it's just kind of lollygagging in here. Not doing too much. Good crude oil. There's something I've forgotten. Gold, silver. Oh, the grains. Soybeans, just kind of nothing you'd really want to trade. Not any real major trend. Wheat has a little bit better prospect, especially if it opened positive tomorrow, giving you kind of a double doji sandwich breakout through this level. Oh, I don't even know whether I can pull up copper. I've hardly ever pull up copper. Is this it? Copper. That's kind of a nothing chart. If you're short copper, right now I'd stay short, but I'd be ready to close a short position if it opened positive doing a doji sandwich. We did hogs. Hogs did a kind of a cradle pattern down here, back up above the T-line. That should imply there's more upside, and I think cattle's still in a nice uptrend. Once again, staying up above the T-line. Okay, that's about all I've got for tonight. There are some very good trade setups. Do you like trading off the support levels? Z-Lab looks very good. ACMR, nice bobble breakout. So if this was a 4-point move, this should take you up toward the $17 range. Hold on, Rob. Let's finish this. There's a DUBA on wheat. There's a DUBA on wheat, a DUBA. A double doji sandwich setup. Okay, so are there any general questions on candlestick analysis? Was supposed to mark down the ones that will likely be. You'll probably see ACMR tomorrow. Oh, Mindy. If this opens positive tomorrow, doing a doji or bullish flutter kicker, you might see that one. And then on the short side, probably going to see this one on a lower open as a short. Oh. What is not a signal? Besides the one just discussed. Wow, that's, I don't even understand that question. There's a lot of signals that are, lots of updates that are not signals. Is there a point of percentage of price when a stock gaps that you say the move is too far from trigger to stay to buy or short? Yeah. On something like this, I might say, oh, I'm going to wait and see what it does. Oh, it's backing off a little bit. Then when it started coming back up, that would have told me that strength was there. What is a J-hook bearish? Well, that's a bearish J-hook. You can see how you've got that little bearish J-hook. So you got wave 1, wave 2, a bearish J-hook, and not a signal. Okay. On TASM, big red candle up there by the 50. Yes, that would have been your bearish belt hold, dark cloud. So observe the obvious, and then I say this because this is so obvious. Look at your hanging man, lower open the next day, right here at the 200. So they failed at the 200. Where was the next target? The 50. You saw some buying there. Then when it came back down to the 50, what did that tell you? The 50 wasn't acting as support anymore. You were in a downtrend. SB, yes. It doesn't matter what you call it. And that's a dark cloud and a bearish belt hold. Now, if it opened right here and came down, then you just call it a bearish or a dark cloud. But the fact that it gapped it way up and brought it back down told you that was more likely a belt hold and a dark cloud. Byron, no, I don't have to use volume on the charts that I analyze because I've already made my trading universe stocks that are trading more than 200,000 shares a day. So volume is not because we've already built that into our trading universe. So if the trading universe is 9,500 trading entities, but if I make stocks that are trading greater than 5 and trading more than 200,000 shares a day, I've already excluded all the low price, low volume stocks, and it doesn't matter what the volume is. Now, on other charts, like over here, that's not what I wanted to do. Over here, I do have volume on here. So you can see how the volume for PLTR today, apparently after hours, was big. So so when I'm illustrating, the volume doesn't mean all that much. However, remember what we always add to our charts. Anything else that can add credibility to our trade. So if this was a big volume day on a dark cloud, that becomes another, it doesn't become an indicator that is the first indicator. The first indicator is the signal itself. Then everything else that you could add to it, like a big volume day, doing it right at a moving average, anything else that you can add just adds credibility to that analysis that signal is going to be confirming. Okay, I guess we're jumping the gun here, but we'll do it. That is a Morningstar type signal, yes. I say Morningstar type signal. You usually like to see that to be a big candle, but when you add all of that together, that's kind of a Morningstar signal. What did I pull up that was a true Morningstar signal? I forget. That you'd kind of consider as a Morningstar type signal. Okay. Any other questions? With that, I guess, Jim, let's go ahead and do the double line. I guess now, Jim, do the second double line. You showed us how to use stochastic to determine oversold and overbought on daily time frame. Enter trades at the open. Once in the trade, do you use the stochastics on the 1 hour or 10-minute chart frames? And if so, for what purpose? I would if, let's say, for example, notice how this gapped up and was trading that far away from the T-line in the overbought area on the daily. Well, we know the alert is that's way far away from the T-line. That's when you flip to your 10-minute chart and say, all right, as long as the 10-minute chart is staying above the 10-minute T-line, we stay long. But if we see a sell signal and a close back below the 10-minute T-line, up here on the daily chart that's way up here in the overbought area, that's the time to start taking profits. So that's the type of thing we're going to be doing on Saturday, is taking all the elements that we know should be on a chart, whether you're trading off the daily, and you're trading off the daily to find the direction that you want to be in on your day trade, depending on the time frame you're trading. And so all that same evidence, I'll flip to that in a minute. Carol, UPS, not anything wildly exciting. That's not a real reversal signal. It kind of implies that you're probably going to be in an uptrend, but just like UPS, it's going to be a slow uptrend. Say like UPS, institutional trader. Now that's a little bit more compelling because you can see, even though this isn't a reversal signal, it did it right at the T-line. That one, if I was buying on positive trading tomorrow, I'd want to make sure it gets up through this level and continue to use the T-line as your stop. Uh-oh, what have I done? That's just a fine how to do. So there's your J-hook plus. Another one that you could be buying on positive trading tomorrow. Some of the oils started coming up, but didn't really confirm today. ABBV. There was your bullish flutter kicker signal. That implies you're probably heading for the 50. AutoZone. That gap up. Left-right combo, bullish confirmation, then a gap up, and then notice what it did. Gapped up again, doing kind of another bullish flutter kicker signal. What's that illustrate? Illustrates there's lots of bullish pressure on this one. I would suspect your first target is here and then see what it does at that level. Citigroup, that's a Morningstar type signal. Another one you could be buying on positive trading tomorrow, but just be aware that your magnitude of return is not going to be that dramatic. So that would be something more I'd put a spread on. Daku, turning into a nothing chart. To go short or stay short, it probably needed to open lower and trade lower today. The fact that it did a bullish harami right here off the 200 tells me if I was short, I'd definitely cover it on positive trading tomorrow. Wouldn't necessarily be buying until you see a full-fledged close above the T-line. This one, you now watch to see how they open this tomorrow. Did something that told you there was a dramatic change of investor sentiment off your best friend type setup. If it starts, or if it opens positive and starts trading positive, it tells you this profit taking is over. Hops, another one you could do the same thing. Again, here's where I check volume that on these low price stocks pretty much wants to see that there's at least 1 million shares that trade every day in those low price stocks. Uber, I think, got hit, didn't they, with yeah, so look at your hanging man, bearish confirmation. Where was it likely to head to? Back to the T-line. Where's another target? It looks like a wee little gap right here. So I would stay short. Oops, Ralph, you're ahead of me. And CT. That one you can get ready to buy, especially if it comes up through today's high. Well, for crying out loud, I've done that twice now. This one you get ready to buy on positive trading tomorrow. And Wish, another one that if it opens positive and starts trading positive, whatever affected this would tell you the profit taking is over. They're still taking it higher. Where was the other one today? Ooh, forget which one was it. No. Darn, I can't remember. YPF was another one setting up. All right. We did this one. Now you have to watch to see if there's some profit taking once you've gotten up to this level. So if I was long, it opened lower, I'd take profits immediately. Then you'd buy it back if it came back up through today's close. You've got a, darn it. got a shooting star, Doji Harami. Makes it fairly simple. If it opens lower and starts trading lower, take your profits. They're probably coming back to the T-line. MBI. Another one that you could buy on positive trading because that would give you a doji sandwich breakout through this level. If you're long, you'd have your safety stop at today's low. If it came back down through there, that's pretty much telling you they're not going through that level. Mesa, just stay long. IBM. Now that's kind of your little double bottom. Not quite a bullish engulfing signal, I don't think. Can't tell whether they both open at the same level. If they did, that's a bullish engulfing signal, which means the next target is filling the gap just above the 34. SanDisk. Oops, did I type that wrong? No, wrong symbol. Nothing. If you were short, observe the obvious, that if they open this positive tomorrow, you cover your short position, but you don't go long until they can actually get it up above the T-line. Whoops. Nothing of any, nothing on this one, Roy. I wouldn't be long or short. That's just kind of a junky chart until they can break that level. Disney. There's your big bearish left-right combo. If you're short or thinking of going short, I'd short it if it came back down through the low of today. That's a very, very bearish signal. Then if you go short, you don't want to see it close back up above the T-line. VCTR, nothing wildly exciting. If you're long, you can just stay long. Kind of a morning star scoop type pattern, implying there's going to be more upside. That's a little bit stronger with the gap up. That one I wouldn't be afraid to buy on positive trading. EURN, kind of a bobble breakout setup. You could buy this one on strength tomorrow. Again, a lot of that will be very easy to distinguish based upon the CPI whipping the pre-market futures around before the market even opens. BGRY. See that one, if you're short, no, you couldn't be short on this one. Nothing to write home about unless you start seeing a very strong J-hook off of this level. IRNT, that one's a little bit more compelling because you can see the uptrend. And that is not quite a dark cloud. It didn't close. It was close, but now it's telling you that you could be buying this one back again. Matador. If you like this one, you can buy it on positive trading in the doji sandwich. CPE, still a nothing chart. Toast. Toast, boy, you can buy this one on positive trading, anticipating your uptrend is remaining in progress. Zixi, if you were short on this one with the spinning top hammer, I would have closed it out today as far as a short. You can always reshort it if it comes back down through this level, but I would anticipate right now, at least you're probably going to bounce back up to the T-line. Up after hours, all right. C, D, N, S. It's up a little bit. Nothing greatly exciting. Just tells you you're still in an uptrend. And DK. And that's kind of a nothing chart. Buy on positive, it wouldn't be on the top of my list. First of all, it's got to get through this level, the 200. That's not a big percentage move. That's just kind of a sideways chart. We did Zixi. Is trading positive after hours. It's at 890 or 889, so it's up here. We did Tesla. Tesla needs to open positive and trade positive. I bet there is a way to quantify the percentage above the T-line where price is likely to pull back and study that, or probably the probability of a gap up with stochastics and overbought or oversold pulling back within X number of days, kind of like the probability of a best friend signal continuing the next day, would be interesting to try to quantify. Well, that would probably take a good while. It probably could be done if you know how to write the formulas. Okay. SB, if you know how to, they were still kind of massaging the numbers we've got from the best friend signal. We did IBM. Kind of basing down here, not a real strong reversal, but probably at least trading positive. And NGL was a nice gap up after the best friend signal. So you might not necessarily buy it here, but at least you should look back and say, all right, after best friend signal opens positive, we should be going after it. S, D, and X. Ow. S, D, and X. Is that the right symbol? Apple, it could be setting up for a J hook. Okay, on the daily time frame, the stochastics were in the oversold area. As the stock had a big 5% move today, the 1 minute stochastic whipsawed big up and down while, well, again, the 1 minute is going to whipsaw no matter what you're trading, while the 10, 30, and 60 minute stochastics all varied from middle of the road to well oversold. How do you use the stochastics or don't use them intraday? I don't know the answer to the other ones. I just use the 10-minute chart. This was a positive open. Didn't have any problems with the 10-minute chart. Didn't really have any problems today with the 30-minute or the 1 hour. So again, I use the 10-minute as my bellwether, and the fact that they never closed below the T-line during this whole uptrend wouldn't have any problem. That's not what I wanted. Gapped up after market. Oh, after market close. Okay, so the first thing, CJ, is you go find out what the news was to help you decide whether that news warranted more upside. SNDX. All right, now what was the question? I'm going back. I don't get it. SNDX, oversold, stochastic, left-right combo. Why is it nothing? Because it's still below the T-line. I wouldn't pay attention to it until they can close it above the T-line. Remember, one simple statistical probability. Until you can see a buy signal and a close above the T-line, you got to consider you're probably still in a downtrend, or at least your uptrend isn't all that spectacular yet. On Apple, really no target, but the assumption would be if this is wave 1, wave 3 should be about the same magnitude. So if I was buying this one on positive trading, I would assume this, that was about 30 points. 30 points from here would be about 185. But that would be the assumption. What would be the final criteria? You'd stay long as it stayed above the T-line. All right, so when we get up tomorrow morning, 8:30, need to see what the pre-market futures are going to tell us about as far as the direction of the market. So with that, everybody have a good evening. Keep Saturday open because you'll get a lot of information there that kind of gives you a little bit more fine-tuned perspective of what to do on trade setups that are going to put you in the right direction at the right time immediately. All right, everybody. See you bright and early in the morning. We'll see you then.